Yeah, we'll see. I mean, it's going to be interesting to see how it plays out. I think too, there's going to be some regulatory responses. I mean, Temu has really kind of just hit the main stage. I mean, I think I agree with something changing with Section 321, at least for goods coming from China. It seems like, a lot of House of Representatives and different committees in the government have seen, Temu and Shein take up a third and utilize a third of the volume coming through Section 321, which is pretty nuts to think about. So I think there's going to be some sort of, change in regulation around that, at least for their shipments. And I think too, like, there's a lot of ethical questions that we could ask around Temu and Shein supply chain, for that matter, in terms of, who their factories are, what regulation and standards they have. To me, there should be a lot more people looking into this and a lot more news around that. I think most people have just been amazed and really kind of blown away by the growth of Temu. But at the same time, I think there's, also going to be privacy laws coming into play, right? I mean, Temu is Chinese owned. There's a lot of scrutiny right now in America around TikTok being Chinese owned. There's been calls for TikTok to be banned. If TikTok's banned in America, does that mean Temu is also going to get banned? There's a lot of scrutiny behind these, Chinese apps in America right now. And so I think there's going to be a lot of regulatory change that we see in the next few years around, these marketplaces and apps targeting American consumers.
Yeah, I think that's right. The rules of the game have to change. And so whether that is closing 321 completely, lowering the de minimis value, doing something where it's specifically targeting companies or shippers or factories, like something is going to change here, because the alternative is not tenable in the current political environment or just in the zeitgeist of where the where public opinion is right now. And so, it's a really difficult thing, because I think that one of the big questions I've wrestled with as we were doing this research is, one, it's great to have low cost stuff, and who doesn't want to save money? Like, it's awesome. But there is a very real cost to low cost goods, and it comes in the form of labor and maybe some human rights violations. It comes in the cost in the form of environmental impact. It comes in the impact of impacting jobs and things like that. So it's one of these things where I think that we're getting to a point where, as a society, we've got to really look at this and say, we're externalizing all of these other costs that go into it. Why are we doing that? Can we change the framework so that people are taking those into account a little bit more?
Yeah, and I mean, in my opinion, we've kind of seen this play out already in some sense with Wish.com, right? I mean, Wish.com was very comparable to Temu, enabling American consumers to shop directly from, Chinese manufacturers. I mean, they kind of had like the same C to M model that Temu and Shein have. Wish.com, when they went public, they were valued at like $14 billion. They just recently got sold for like 120 million or 150 million. I mean, they were on the verge of going Chapter 11 bankrupt. They just weren't a sustainable business. When they kind of lowered their ad spend, their growth fell off a cliff, their retention fell off a cliff. I just really wonder, like, how sustainable is this business model? To me, we've seen it play out with Wish.com. I just question the core thesis behind this business to begin with. Is like Temu actually going to be here in 5 or 10 years? To me, I think if you turn off their ads, I think they see a significant drop in customers and volume. And, when that tide changes for them and their, parent company, PDD, can't continue to support this ad spend, I think they're really going to drop off a cliff. What are your thoughts around that?
I think that's right. I think the reality too, though, is that you can build a $1 billion business, a profitable $1 billion business, if you spend $500 billion to get there, right? So it's one of these questions where it's like, if they don't care about return on invested capital, then Temu will exist. Like, it's going to be there. Will it be the end all be all that replaces all of e-commerce and physical retail? Probably not. I don't know how they make that switch from losing so much money, being so aggressive, and constantly trying to acquire new customers to being profitable and being kind of the place that people will go to. Will there be people that will always check on Temu and will love that? Yes. Is it 330 million people in the US? I don't think so. And so that's the challenge that they're getting into, is much like these subscription-based companies that got into trouble by constantly spending money on customer acquisition and playing the LTV calculus games of it'll pay off down the road. I just don't know if that math works out. And it's going to be a question for how long and how much money does Pinduoduo want to lose to kind of get a toehold or a foothold here.
Yeah, I mean, I think what Pinduoduo could do from a financial perspective that'd be super interesting is if they rolled out Temu as its own public company, right? And then listed it on, Nasdaq or, whatever it may be. Because right now that's, basically funneled into PDD, which is already publicly traded. They could, roll this out as its own entity and, make it its own public company, which would be interesting in itself. So, I mean, we'll see if they do that. That's just kind of a financial engineering thing I see someone thinking about and maybe their CFO moving forward with, but we'll see how it plays out.
Yeah. Well, Nathan, this has been quite the episode. We didn't get to nearly everything that we researched. I guess, what are your big takeaways from diving into Pinduoduo and Temu?
I mean, I think Temu is just this crazy beast that's growing so fast in America right now, but I just really question the thesis behind it. Like, how sustainable is this? I would ask them, like, hey, if you turn off your ad spend, what's retention look like? What does growth look like? To me, I believe it would fall off a cliff. I think one of the coolest parts that we saw during the pandemic was actually Airbnb in terms of them. If you remember, they turned off their ad spend completely. It went from spending like hundreds of millions of dollars on Facebook to $0, and their growth continued and their retention continued. They really have a strong brand in America and they have a strong business model. To me, I don't think that's the case with Temu, and especially when they're losing money on every order. It's like, how sustainable is this from the get-go? So my takeaway is, it's Pinduoduo trying to reinvest its profits to expand into America, but I don't think they're doing so in a sustainable manner. I think, in the next 5-10 years, I don't even think Temu will be around anymore.
Yeah, I think I agree with that. I think regardless of if Temu is a ongoing entity or not, I think that the impact of Temu in Western e-commerce is going to be profound. And effectively what they've shown is that the low end of the market for e-commerce companies is gone, right? Like, now that this genie is out of the box and we have factories, selling below cost and being able to ship directly into the US, whether it's Temu or Shein or whatever other company comes up, that is now going to be a thing. And so if I'm an entrepreneur in North America and I'm thinking about what products I want to go after, I need to go up market. I need a higher quality product. I need something that's going to be more expensive. I need to be able to make the economics work that way, because there's no way that I'm going to be able to compete on price and offer a lower price than what's there. And I think the other big thing of what Temu is going to force into Western e-commerce is a gamification of shopping. And I think that's become more mainstream. I think, people are going to start embedding apps more into their product. They're going to put more games into their apps, right? You see this emergence already of TikTok shops into a social media app. I'm sure Facebook is working on something like this. X is always working on stuff like this. And so I think that this will be kind of the watershed moment that we look back in 10 years to say, this is where e-commerce definitively changed from what it was pre-Temu to what it is post-Temu.
Yeah, I agree with that. I think that's a great take. And this was an amazing deep dive. I mean, there's just so much to learn and so much to dive into. I think we did a great job, Aaron. I'm excited for everyone's feedback on this episode of E-Commerce on Tap, brought to you by Sourcify and Isba. I mean, this was just an incredible story in terms of resilience by the founder, Colin Huang, to, kind of take a bat at a e-commerce marketplace again, and just to dive into the growth and sheer size and back end of Temu was so just jaw-dropping to understand. It was really just insane.
Completely agree. I think we could probably do a whole show about Temu and Pinduoduo and just Chinese e-commerce, but a lot to learn, a lot to be concerned about. But I think their impact is something that every company is going to be feeling right now.